Are you planning to buy or sell a home in Saskatoon? Well, you could be stepping into one of the most competitive real estate markets that we've seen in years. With inventory at record lows and prices rising over 6% since last year, choosing the right real estate strategy has been more than critical than ever before. Stick with me because in this video, I'm going to be breaking down the Saskatoon's November 2024 real estate statistics, and I'll show you how to avoid those costly mistakes in this market report video. Whether you're a first-time home buyer, a seller, a seasoned investor, or someone looking to upgrade or downsize, you're about to face some tough competition. So don't worry, I got you covered with actionable insights that will give you an edge. If you're ready to dive into this Saskatoon's real estate market report, let's make it easy for you. Every single week, I work with people just like you, buying, selling, relocating, or investing in Saskatoon. I'm here to guide you step by step to make sure your move is as smooth and stress-free as possible. So if you need any help with anything real estate related, I got you covered. Just feel free to shoot me a text or give me a call. My number is 1306-370-6179, or you could use any one of the links below to get in touch. And either you're looking to see some of the properties that are for sale currently on the market or home valuation, all the links are there below, and feel free to click on any of them and then we can connect that way as well. I can't wait to help you achieve your real estate goals. Let's dive into the market overview, and first we'll talk about the inventory story. So Saskatoon is experiencing crazy tight inventory levels right now, with only 693 properties for sale, representing less than 2 months of supply. This is a 21% drop compared to the last year. And as we can see from the graph here, the inventory levels represented in the blue are quite a bit lower. With seasonal demand, inventory tends to slow down. People don't want to move in the wintertime. Hypothetically, theoretically, buyers and sellers just tend to hibernate, and not as many people go and list their house because they're waiting maybe for the spring, unless they desperately need to sell. But as we can see with the lower inventory of the blue graph there, the green sales have actually stayed relatively consistent. They've dropped down slightly, and prices, as you can see, are diminishing as well. So sales are not very, but they're relatively strong considering the inventory, and the prices are diminishing a little bit with the seasonal adjustment. This tends to happen with this time of year. People tend to just slow down in the market. Now, continuing on with the inventory, we can see that overall year to date, the inventory has dropped by a total of 18%. Detached houses have decreased by 17%, row and townhouses, all of the above, with apartments, acreages, mobile homes, and multifamily, all of the inventory has decreased since this year. It's just a known fact that this time of year, people tend to not list their property as much. It could also be the fact that the capital gains that have happened in June, people start to reconsider their options to sell off their capital assets with the increase of taxes that they're going to have to pay. So overall, there's been less inventory that has been on the market. Now, moving on into the sales summary. So in November 24, we saw 380 homes sell, which is actually a 21% increase compared to last year. So we've seen the inventory decrease, but the sales have increased. So with the limited supply, the demand has actually gone up, which hasn't really reflected in prices a whole lot. Prices have still come to trickle down a little bit. However, there is an increase in amount of sales in this time of year, relatively speaking, compared to the previous years, overall, considering that the inventory is a lot lower. Even compared to the 10-year average, this November in 2024 has increased by 32%. So the market is still rapidly growing this time of year. There's been a lot more demand compared to the previous years that we've experienced. As for the sales comparisons, we can see that the dominant category is detached houses. However, there's still a good chunk of apartments and row townhouses that still seem to be selling, some semi-detached houses, but those are the dominant areas that continue to be increased in sales. Now, going on into the price range of where the properties are selling. So we know that the benchmark price is around that $398,000 mark, and overall the property values tend to fluctuate around there, but we can see that within the 200 to 300,000, and then the 300 to 400,000, and the 400 to 500,000, those are the main areas. There's still some properties that are selling below 200,000 and still some selling above 500,000, but that seems to be the sweet spot for where properties and average price points are selling in today's market. Now, going back to this total inventory and sales graph, we have seen that there is a big spike in in May, and overall since last winter all the way into the spring and summer months, and then it started to fizzle down into the end of summer. We had a little increase in October, and now the sales are continuing to decrease. However, I just want to reiterate, with that lower inventory and the limited options and supply that buyers and investors have to choose from, the demand and sales is continuing to remain at that relatively consistent level. Overall, still a little bit lower. However, it is stronger considering the previous years and this time of year that we've experienced. So overall, year to date, it has dropped down in the sales, and the overall benchmark price is decreasing, but relatively speaking, compared to the previous years, we're experiencing a pretty strong market, high price, high sales, low inventory. So it is still a stronger market, more advantageous for sellers and more competitive for buyers and investors. So as we can see here with the year-to-date sales in November, main category that increased in sales in this past month overall year-to-date has been semi-detached houses. So those have been half duplexes. They're lower in price point and they've increased quite a bit. Same thing with mobile homes. It could be people that are just looking for some affordable places to live, don't want to pay rent. That category has increased by 53% year to date, and semi-detached 24%. Detached row townhouses and apartments have all been relatively similar at the 7 to 8%, but those other categories have all been quite a big increase. And same thing with the multifamily. This is an interesting stat. We've seen a negative 8% year to date sales decrease. Since my opinion on this is that with the capital gains that has been implemented, investors and entrepreneurs, business owners are really hesitant on selling their assets, probably more rewarding and benefited to refinance their asset and not have to pay a huge lump sum of capital gain taxes by selling off those assets. So the multifamily aspect and the investor game has diminished a little bit with those multifamily sales decreasing. So now moving on into the pricing picture, we have seen here that the price year over year compared to last year has increased by 6% to 398,000. This is a slight dip compared to October from 402,000. However, the strong economics has still made the price very stable. We can see here in this graph, overall, the benchmark price is increasing compared to last year's. However, this seasonal adjustment, we have taken a small dip and the months of supply is still pretty low. And this is relatively speaking with the lower inventory, people being hesitant on listing and selling their property. However, sales still being strong. So the price overall is still relatively strong as well, but the seasonal adjustment has allowed it to decrease a little bit. Compared to last year, as we said, it has gone up. So what does this mean for sellers? Well, considering last year and previous winter seasons, this winter season is relatively strong speaking compared to others because that we have a high demand with buyers and strong immigration and overall lower interest rates, strong economy, people needing houses here. So with the season being as it is and the low inventory, sellers are receiving the benefit of the doubt in the market right now, and buyers are having to be a little bit more picky choosy and still needing to be competitive in some situations where listings and sellers are pricing their property correctly and marketing strategically with their real estate agent. So now let's move into the driving demand of this market. Saskatchewan has received a significant influx of newcomers with over 26,000 new immigrants arriving between July 2022 and June 2023. So it was quite interesting. This statistics from Statista, we've seen here from the year 2000 all the way to the year 2023. It's been a huge increase of new immigrants coming to Canada and Saskatchewan specifically that are needing new houses. So all these builders are trying to find homes for these people, but it's been a very imbalanced demand and supply curve. There's been a lot more demand then there's been supply, which is creating the strong market and the strong price and the advantageous to the sellers in today's market. In the second quarter of 2024 alone, international immigration added 7,720 people to the province's population. This is according to the Canadian Real Estate Association stats. This surge in population directly impacts the housing market as more residents obviously increase demand for housing, so leading to tighter inventory and rising prices. So what could this mean for population and more competitive for your dream home? Well, yes, this could lead to more competition since there are more people needing for houses. However, like I said too, there are opportunities out there and ways to find that house that you're looking for, even though there are limited options out there now. Well, let's talk about interest rates and housing affordability. The Bank of Canada has adjusted its policy rate to influence economic activity and control inflation. In July 2024, the bank reduced the policy rate by 25 basis points to 4.5, and we're expected to receive even more interest rate cuts in the future. So lower interest rates generally make borrowing power more affordable, potentially even increasing demands for mortgages and consequently houses. So prospective buyers should be aware that interest rates can fluctuate, so it will affect your long-term affordability. So be mindful of that. Talk to your mortgage advisor or your bank to decide if a variable or a fixed rate would be more advantageous to you. There's so many different options that you can choose from, but I always recommend working with a mortgage broker, as their fiduciary duty is to help your best interest to get the best mortgage rate for your property. And my overall view of this whole Bank of Canada and economic driver with the interest rates, it shows with the trend that they're supposed to be cutting rates more in the future, which will obviously help with the buyer's affordability power and potentially even help with prices and overall the market demand as well. So moving on to the economic factors, in the second quarter of 2024, Saskatoon's GDP grew by 2.8%, surpassing the national average, which is quite fascinating. The region's unemployment rate was 5.3%, indicating that we're in a stable job market. This economic resilience makes Saskatoon a very attractive destination for both new residents and investors, further stimulating the housing market. So how does the economy influence your decision to buy or sell? Well, you must know that you're essentially investing into an asset that is dependent on the economy. So if the economy is doing well, then your investment into that home is going to increase or decrease depending on the economy. And then seeing how Saskatchewan is a huge influence in the overall Canadian economy, that is a big driver towards seeing how your property is going to appreciate, and overall in the future there seems to be a good chance of that continuing to increase with the strong economy that we're in. Comparing Saskatoon to other major cities in today's market, well, it's not as crazy high in price for sure, and there's a crazy low vacancy rate in today's market with 1.6%, with that being a statistic from CMHC and Colliers. As in the third quarter of 2024, the vacancy rates have dropped quite a bit, and this has made property rentals skyrocket in rental rates and just making it very difficult for renters to find a property. This has been the lowest in Canada for a long time now. So this vacancy rate that's been very low has reflected very strong demand for industrial space, also just healthy local economy. Obviously, Saskatoon's GDP growth rate also positions it very favorably among other Canadian cities, making it an attractive destination for new residents and investors as well. People all the way from Ontario and British Columbia are looking into Saskatchewan for the investment opportunity, since there's a very low vacancy rate, high demand, good overall investment price point to get into the market compared to those higher other markets. So it makes it a very affordable and high ROI investment for these investors that are out of province. So whether you're buying, selling, or investing, these numbers tell a story. Saskatoon's real estate market is competitive, it's growing, it's full of opportunity. The key is knowing how to navigate it. And that's where I come in. I'm here to help you navigating the buying, selling, investing, relocating journey here in Saskatoon. So if you have any questions about any of these stats, how the market's performing, where it's projected to go in the future, and what's the big driver, and all those categories and things, then just feel free to give me a call or shoot me a text. I have my number in the description below, along with all those links that will help you either buy, sell, invest, and give you a value, and give you all the properties that are on the market and that have sold, trying to provide as much value as possible. So feel free to connect with me. I'd be happy to connect with you, help you achieve your real estate goals, and look forward to connecting with you in the next video.